This is the Southside School of Financial Freedom Watch List and Market Report for the week ending June 3rd, 2023. Our question this week is, what is equity? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 2.12% on Friday and was up 2.02% for the week. The S&P 500 increased 1.45% on Friday and was up 1.83% for the week. The Nasdaq increased 1.07% on Friday and was up 2.04% for the week. Looking at the week, we can see that there were 8 up finishes versus 4 down finishes for the major indexes. On Monday, the market was closed. On Tuesday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. On Wednesday, all the major indexes finished down. On Thursday and Friday, they all finished up. New unemployment claims were 232,000. Job openings climbed higher for the month of April. Private payrolls rose by 278,000 in May. Non-farm payrolls increased 339,000 in May. Mortgage demand dropped to the lowest level in 3 months, and the Senate passed the debt ceiling limit bill. New unemployment claims, job openings climbing higher, private payrolls rising, non-farm payrolls increasing, mortgage demand dropping to the lowest level in 3 months, and the Senate passing the debt ceiling limit bill are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is equity? Equity is ownership. In the case of corporations, equity is what the corporation owns after deducting what is owed. Owners of corporate stocks have equity in the corporation. Thus, stocks are often called shareholders' equities or equity shares. The accounting formula for equity is assets minus liabilities. Similarly, with real estate, the equity is the difference between the value of the property and the balance of the loan or mortgage on the property. A homeowner may have little or no equity in a home depending on the value of the home and the balance of the mortgage. Being underwater on a home means that the house is worth less than what is owed on the house. When the home is sold, if the proceeds from the sale is not enough to pay the remaining balance of the mortgage, the homeowner would have to pay the difference to the mortgage holder. Being underwater on a house also means having negative equity. Do you have any equity in a home? Do you have any equity in a business? Do you have equity shares? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending June 3rd, 2023. The strongest performer on the list this week was 3D Systems Corporation, ticker symbol DDD in the first column. It was up 11.4% on Friday and increased 16.15% for the week. 3D Systems Corporation provides 3D printing and digital manufacturing solutions in the U.S. and internationally. 3D offers a number of 3D printer technologies such as stereolithography, selective laser sintering, direct metal printing, multi-jet printing, color jet printing, polymer extrusion, and other printing methods. 3D Systems also offer computer-aided design software and other 3D tools that can turn designs into printed 3D items. The company blends various materials such as plastic, nylon, metal, composite, elastometric, wax, polymetric, dental materials, and biocompatible materials to create three-dimensional products for a great variety of industries. Looking at a summary of results, you can see that 3D has increased more than 25% year to date. I did not trade or generate cash flow from 3D this week, though I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 34.69% versus 10.89% up for SPY, a difference of 22.4%. The Southside is beating SPY by more than 22%. The cash flow generated by the Southside cash flow system for this week was 3.35% of the portfolio account value. The account value changed by 7.71%. Meanwhile, the S&P 500 ETF SPY changed by 1.88%. Bitcoin watch. Bitcoin gained 1.52% this past week and appears to be on the verge of a bull market. Though it is down more than 60% from its all-time high, which was achieved in November 2021, it is up more than 64% year to date. I sold option contracts on two positions this week, one call and one put, that range from $20.34 to $65.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for the week for other questions. The videos are organized in playlists, and they are also arranged by subject matter as well as levels. In the meanwhile, please like, share, and subscribe.